In this video, traders, we're going to look at advanced opening range breakout strategy. A little bit of an extra dimension to the traditional and simple opening range breakout trade. Stay tuned. Hey guys, warm welcome to you. All right, so opening range breakout trade, you're probably familiar with this. It's basically where you're framing the open, most of the time that's 15 minutes, and you're going long when a breakout happens above that, and you're going short when a breakout happens below that. There are some parameters and adjustments and stuff. That's a simple kind of idea of it. The theory being there's a lot of noise and chop at the open. Once that's kind of happened and set, the true trend for the day starts to kick in, and your job is to ride that trend for as long as possible. I like this trade. I think this is a good trade. It's got some longevity to it, but the downside you have with the traditional opening range breakout trade is that a lot of time you're going to get pinged out in chop. It's going to break out, it's going to come back, it's going to mean reverting day, and you're trying to get on this trend and there isn't a trend. And so how do we add an extra dimension to things to make it a little bit more effective? So let's take it one step further. Let's go a little bit advanced. And rather than this, imagine this is your kind of 5-minute chart here, right? You've got your range come in first 15 minutes, it brackets your high, brackets your low, breaks out from the top, goes long. That'll be a perfect trade, right? And you have targets and set. Great, that's exactly what you want to do. But very often you're getting wicked out and stuff. So how do we filter that to have a tendency that that is the right direction and that we potentially have a trend type day? That's the key, right? Because if you're doing it every single day, you know, maybe you got the direction right, but it's this, that's faking out. So let's add an additional filter. Let's take it into an advanced level. So advanced filter is to say this. You look on your daily chart and you go, right, where are we positioned on the daily? And you reverse engineer what you'd like to see on a daily on an intraday basis and then plug in this strategy with it. So let me explain what I mean by that. So if you're sitting just in a range on the daily chart and it's just sitting there, imagine this is your kind of daily chart here. You guys can just see that. And just sort of sitting in a range like this. There's nothing else going on, right? The chances of that suddenly breaking out, it could do, and it will resolve at some point, but that's not the rhythm and the structure the market's in at the moment. Yeah, and so if you're trying to trade this opening range breakout strategy, you're expecting volatility expansion, you're hoping to get a trending type day, you're asking a lot for the market to suddenly do that. So when you start to trade this in this scenario, you're gonna get chopped up. You want to find the right conditions. By the way, actually, I've got an inverse function in that opening range breakout engine where you can do the opposites of what the traditional breakout strategy says. You can go short at a break of the high and long at a break of the low to try and take advantage of that type of thing. That's by the by. What you're trying to do with the traditional breakout strategy is say, hey, what are the scenarios and what are the circumstances and what does the rhythm look like on a daily chart that is more likely to result in this type of thing where we have the range and then the breakout? So one direction. We want to say, hey, I want to trade this in direction. I want to say, hey, I want to trade this long, but I only want to trade it long once we get the breakout. So direction, you want, okay, what about a daily flag? So the long side, what about a good high push up that flags? And maybe it's flagged for a couple of days and it's due to resolve to the upside. That's when you could say, hey, today we've had a good 4 or 5 days of pull, we've had 2 or 3 days of consolidation, day 4 or day 5, that's likely when we're going to break out the flag. If that setup starts to resolve itself as I expect it to on the daily chart, how do I get on that? Let me use the opening range breakout strategy in that condition after we've got the flag forming. So after you've seen all this, you're like, hey, I'm waiting for that to break. Why not take that at the open? Why not bolt this simple strategy into it in those conditions? Because you want it to position long only, and you want to say, hey, if it breaks out, that could be the day that it breaks out and gives me a good trend day, and I'm on that. And that's a way of getting involved in that. So that'd be one way to do it. Look for a kind of daily flag. The other thing is to look for mean reversion within a trend. And so imagine this daily chart here, and very often this happens, guys. We have this, you know, shallowish or 45-degree trend up that just oscillates around a moving average or a mean. So it's up, down, up, down, up, down. And very often we can either draw a channel or we can put a Bollinger Band or a Keltner channel around that and say, right, when it's at the lower end, if we have some kind of tendency to break, I want to preempt that by bolting this strategy in on those conditions. So you're not going to trade the opening range breakout strategy anywhere up here, anywhere up here, anywhere up here, anywhere up here. You're going to trade it at the bottom of this. And actually, because it literally said, hey, I don't want to get rid of any of this stuff here. I'm not interested. I'm interested when I feel that we're in an uptrend. fine, got that, tick. And when the chances are of I was starting to curl back up and starting to have that big green day and preempting the fact that we get a nice green candle on that daily chart. Great, so you use that at the bottom of a channel, if you're using kind of technical standard channel like this, bottom of a band, Keltner, etc. Or you just use it as some kind of support. Obviously flipping this, by the way, if you want to go to the downside, but imagine you have some sort of support. Market's come down, maybe it's found some sort of support and you think, hey, there's a good chance of that bouncing off that support today. There's my filter, as in the advanced filter of the daily chart. Now let me use this reasonably simple way of getting into that, trading that opening range breakout, assuming and thinking, hey, I'm going to get that solid green candle on the daily chart. How can I get on board that? Opening range breakout trade is a good way of getting on board that. So at some kind of support, and anything really that fits the framework you're trying to put on the market. Daily chart as a filter is a great way of adding that advanced filtering process into trading this. Because like anything, guys, most of these setups and strategies are effective, but they're useless when you use them in every single condition. Every single condition is not, the key to trading is to say, hey, where is the best time for me to use this tool? Where would this weapon work the best? What battlefield? The battlefield this work the best is when you're about to get that extension, you're about to get that volatility breakout, you've got the goods, and then there's where you have a stop. You have a stop position, you kind of adjust it so that if it doesn't, but you're giving yourself the best possible chance of success rather than using it every day. And when it's a noisy type environment, it's not going to be conducive. You're asking too much of the market. So opening range breakout strategy, those are some ideas for advanced filters to add before that. And then you go, hey, if this filter's ticked and I get the trigger from the opening range breakout strategy, I'll take the trade. If neither of those are there, I won't take the trade. Hope it's helped, guys. See you in the next one. Take care. Keep your risk managed. Bye-bye.